states will now have to harmonize their national laws to conform with the regional network. Professor Joe Kieya is the CEO of East African Business Council. He joins us from Nairobi. Thank you very much for coming through, Professor. The much-awaited launch of the EAC Common Market. Just give us a sense of the energy within the business community today in terms of their expectations for the common market.
Basically, what I think likely to happen is that with now the protocol, most of the businesses will be able to become efficient in the sense that they will be able to take advantage of comparative advantage without giving too much because we have a workshop coming up next week. But basically what's going to happen is that the transaction cost of doing business in the whole of East Africa will definitely have to come down. So in a nutshell, it will be a win-win for all businesses within the East African community.
All right, now what's happened in the run-up to the launch is a lot of last-minute deliberations about the drafting of the list on sensitive goods and also complaints from manufacturers that not all member states are applying the common external tariff accordingly. Have all these issues been ironed out at this stage?
No, not quite. I think there's some countries which I think they're still lagging behind. I think Kenya and Rwanda has been taking the right initiative, because basically what's going to happen is that with the protocol coming into place, they has to be harmonized within the national laws. And I think Kenya has been making some very good step toward harmonizing. So the business community complaints are well taken. Obviously, the coming of the common market doesn't necessarily mean that there will be freedom of goods, services, and capital and labor. But I think this is a beginning, and I'm sure probably by, according to the schedule, by August, this law is supposed to be harmonized.
All right, the national laws you referred to, that's also quite a cumbersome task. There's a need to streamline exchange controls, labor laws, migration laws, laws around land ownership, as well as, of course, the regime around customs and excise. Just how much has been done in this regard?
Sure. I think Kenya has already made some tangible steps. I think there is right now a commission which have been given the task to look at the national law and see how that can be harmonized. And I think with the president giving the Kenyan president giving the direct to the Attorney General, this should again, it seems to me that will take place. Obviously, there are other countries which have not been done, but I think this should not be a bad thing in the sense that at least everybody within the community seems to embrace these, this protocol.
Now, obviously, Professor, there is a caveat to this entire process of integration, and that's the disparities that exist amongst members of the EAC. Kenya is obviously the regional hegemon, the largest economy in the region. Uganda has great potential, growing above 6%. It will be producing oil in a few months to come. Tanzania also showing potential, but then smaller economies like Burundi, and over and above that, there are plans to incorporate the Democratic Republic of Congo and eventually Southern Sudan within the framework. How feasible are all these plans?
Again, I think obviously you raise a very difficult question, but based on the free market theory, obviously the less developing countries will tend to grow fast if the common market come into place. I'm talking about, you mentioned that Kenya is the major economy, but obviously other countries like Burundi, Rwanda, and what have you, they, again, if these protocol come into place, they will tend to grow faster than a country like Kenya. Obviously, these have been demonstrated elsewhere, like NAFTA in the US, where US and Mexico came to agreement. Obviously, there was a huge disparity in Mexico, but with the NAFTA, Mexico, grew faster than the United States. So I'm assuming this probably will be replicated here in
All right, let's have a sector-specific focus, and this time on financial services, which are quite fluid, especially as most of the bosses in the region embrace technology and electronic trading. What's the EAC's views on capital markets and financial services? Because there is concern that's been raised about capitalization standards for insurers in particular, but banks in general.
So again, I think this is also still in the making, and I think one thing we have to understand is that the protocol really has steady stage. There's a lot of work need to be done, and I think you're absolutely right. The financial services is a case in point. Obviously, the capital market, there's some countries which tend to be a little bit more secretive, but I think in a whole, I think we have to really look at very positively in the sense that this is a good beginning, and I'm sure maybe some of these will be tackled in the near future.